All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Wednesday, everybody. Today is November 27th, 2024. And the big story this morning, I should say the big story last night, is Dell's earnings. The big AI darling, the new Supermicro, if you will. Dell, if you guys didn't already know, they are the manufacturer of the servers that contain the Nvidia chips. And ever since everything at Supermicro went to hell in a handbasket, Dell has largely been the biggest vendor for Nvidia's AI servers. And well, they reported earnings yesterday, and the earnings were okay, a slight EPS beat, adjusted $2.15 versus $2.06 expected. So they beat on earnings, but nobody cared. It was the revenue. Their top line number was a big miss, $24.4 billion in revenue versus $24.7 expected. Now, Dell's revenue has been skyrocketing in these last couple of quarters, especially as a lot of the business has been moving away from Supermicro and towards Dell. Now, I was kind of expecting Dell's revenue numbers to be a big beat this time around because we've seen already stories about how Nvidia's production is being diverted from Supermicro over to Dell because of all the accounting problems there. Well, that didn't happen. Dell's revenue numbers were pretty disappointing. And not only that, their forward guidance was disappointing also. 24 to 25 billion in revenue guided for this fourth quarter versus the market expecting 25.6 billion. And also there was a quote from the CFO. It was certainly not an optimistic quote. It's debatable how negative the quote was, but the CFO said something along the lines of, this business is not going to be linear and that there's challenges moving forward and some, all that other corporate speak that came after. But this business will not be linear. Now, I hate to parse words like this and to try to read so much between the lines. It's just a couple of things that he said there. But look, he certainly didn't say demand is insane and off the charts and Crazy Eddie's prices are, none of that Jensen Huang crap. I mean, it was a very sobering assessment of the state of the AI server business. When he says it's not going to be linear, he's suggesting there's going to be ups and there's going to be downs. And well, nobody has mentioned any downs prior to this point. Nobody except me and a couple of people on Twitter, that is. And so he's kind of suggesting we might be looking at some downs in the near future. And I can't help but wonder, this Blackwell thing that's been going on, that everybody denied it. And oh my God, the information puts out an article about Blackwell chips overheating. And Jim Cramer, with the kiss of death, he comes right in and he's like, there's some news outlet out there struggling for relevancy. And they're saying this short attack on Nvidia. We've seen this before, like totally unfounded accusations against the information, which, by the way, the information's reporting on AI Mania has been magnificent. They're the only media outlet that I'm aware of that's even asking prying questions while everybody else just giggles like school children every time Jensen Huang enters the room. The information is actually asking probing questions and digging into this bubble, and it is a bubble. And a couple months ago, they reported that Nvidia had told their server manufacturers, i.e. Dell and Supermicro, that they need to redesign their servers because the Blackwell chips are overheating. In other words, like, hey, there's a problem. It's not my chips. You're using them wrong. Go redesign your server racks. And look, I don't work in the AI server business, but that doesn't strike me as a like go do and report back at lunchtime kind of thing. Redesign your server racks so they don't overheat. The cooling technology that goes into these server racks is like the primary function of them. And if it's not working, that means there's big problems with the Blackwell GPUs. And everybody just wants to ignore it. Even on this earnings call, I didn't listen to the whole thing, but to my knowledge, there were no questions about overheating Blackwells. There was questions about delays in the Blackwell. When might it be there? Is that affecting it and everything? They're dressing it up as a supply constraint. It's really starting to look like a design flaw. And now we've got Dell is disappointing in their forward guidance because they can't move Blackwell servers. Again, they're saying we're supply constrained. Well, yeah, we can't supply enough servers that freaking work. I guess if you look at it that way, it's a supply constraint. Like, the market for time machines is supply constrained right now. That's an accurate statement. There is an inadequate supply of time machines, but it's not because of a hiccup at the factory. It's because time machines don't work. And so the market is just like ignoring this whole thing. Now we've got Supermicro and Dell, both server manufacturers, reporting disappointing revenue and forward guidance. the market largely yawned at Nvidia's earnings. And everybody's just assuming as soon as this little minor engineering challenge gets overcome, we're going to go back to the insane demand and the magnificent year-over-year growth numbers. It's really starting to look like that may not happen. So I wouldn't mind a little bit of honesty, maybe a little bit of healthy skepticism in the financial press about what the hell is going on with these Blackwell GPUs, instead of ignoring the problem and attacking the independent media sources that are actually digging into this stuff. So possible another dent in the AI Mania story this morning. Now, we didn't just get Dell earnings last night. We also got HP earnings. That was also kind of a miss. Adjusted earnings per share, 93 cents. That's pretty much in line with expectations, growth of 3% year over year. But once again, a top line miss, $13.2 billion in revenue over at HP. That is down from versus $14 billion expected, and down 4% year over year. So we saw this a little bit with Best Buy's earnings yesterday. The consumer electronics market not doing so well. So HP also joining in with that one. Also, their forward guidance was disappointing. They guided for EPS of 73 cents versus 85 that the market was looking for. So problems in the personal computing space probably. Also, an interesting story coming out of France this morning. There's an article in the Associated Press, in Reuters, that is saying that the French are weighing providing 0% interest financing for the construction of 6 new nuclear reactors. And I'm not talking about the little pocket small modular reactors like we're talking about building here in the States, the little ones that can kind of like fit on the back of a truck. We're talking about the big pigs over in Europe, those big EPRs, the European pressurized reactors that Areva makes. Those things are 1,650 megawatts electric. They are gigantic. And the French want to build 6 more of them, and they're providing 0% interest financing to build them, or at least that's the rumor this morning. Now, guys, this is not something that's going to appear overnight. These things take freaking years, closer to a decade to build. They have built some of these reactors already. Those projects were notoriously over budget and delayed. So this isn't like an all clear, but once again, it does show how the world is warming to nuclear energy. You don't hear from the idiots at Greenpeace or the Sierra Club anymore. You're actually seeing a lot more people embracing nuclear power. So I'm encouraged by that. We got another profit warning from Aston Martin this morning. That is the second inside of a month. We were just talking about Aston Martin not too long ago. They're delaying this special run of their Valiant models. They were going to build 38 of these specialty cars that are going to sell for like $2.5 million a piece. And well, that project is getting delayed. But buried within that press release is like, 38 cars are delayed. They're also, by the way, we're raising 210 million pounds in the form of new debt and diluting our shareholders so that we can continue electrifying and building electric vehicles that nobody wants. Well, okay, now it's news. More problems over at Aston Martin this morning. And I don't know if you guys have noticed what's going on with coffee. Don't mess with my wake-up juice, man. They're messing with my coffee again. The price of Arabica coffee futures jumped 3.7% last night. Guys, Arabica coffee is now trading at the highest price since 1977. And I found that a little odd because, well, nothing is cheaper than it was in 1977. But apparently there was a big coffee crisis in the 70s. Well, Arabica coffee has skyrocketed. It shot up last night, but really it's gone up for about the last 3 weeks in a straight line, and it's been rising all year. Coffee's getting more expensive. And look, if there's one thing people don't want to hear after living through this miserable spat of inflation for the last couple of years, and the rent has gone up and the car insurance has doubled and everything else, just don't mess with the coffee. I used to have a mug at the office and it said, "I drink coffee for your protection" on it. I'm serious, guys. If people have to start cutting back on coffee, then there's going to be incidents. There's going to be events. Don't mess with the coffee supply, please. We also got 30-year mortgages came out. Finally, a decline in the 30-year mortgage rate. It was a modest one, 4 basis points or 0.04%. The interest on a 30-year mortgage dropped ever so slightly last week. That is the first drop in mortgage rates since the Fed started cutting rates. Mortgage rates have done nothing but go up in a straight line other than this past week. Even after this very modest decline, mortgage rates are still 71 basis points higher than they were before that Fed rate cut back in September. The 50 basis point rate cut that they were in a gigantic freaking hurry to cut 50 points. And now they're like, we're no longer in a hurry to cut rates. Well, what changed since then? Yeah, nice independent Federal Reserve you got there. So slight dip in interest rates for mortgages, and it showed right away in the applications for a mortgage. Applications shot up 6.3%, mostly led by applications to buy a home. Refis are still pretty quiet. Although it's also worth pointing out, guys, that the comps a year ago, some of the comparable numbers for those mortgage applications, a year ago, that week was Thanksgiving. Thanksgiving is a little bit later this year, so there may not be a apples to apples comparison going on here. And we also got initial and continuing jobless claims to this morning, a few minutes ago. We'll talk about those. But first, we got to shrink my big melon of a head. And let's see what's going on in the market. And if you will, hit that like button for the YouTube algorithm while we're here. And if you're new, hit that subscribe button right next to it, because we do this one every day. So come have your coffee with the melon heads, with the exception of tomorrow and Friday. Just a reminder, guys, there will be no show tomorrow or Friday for the Thanksgiving holiday to enjoy time with family. And before I forget, everybody, please enjoy this holiday and time with your loved ones. If you're traveling, be safe on the roads. And I'll see you guys again on Monday. But first, we got to get through the update here. The S&P 500 is down a modest 4 points this morning, basically 0.07%, essentially unchanged for the morning. The Dow is also barely budging here, up 38 points or 0.09% to the upside. And the NASDAQ is down 38 points or 0.18%. Probably that sell-off in Dell is contributing to the NASDAQ here. Meanwhile, the DXY, sharply weaker dollar this morning. Look at that, 93 basis point dip in the dollar. Not sure what's driving that. It started about 1 a.m. Eastern time while we were all sleeping, and then it continued. It picked up a little bit of steam when those revised GDP numbers came out. There wasn't really any big news in those GDP or inflation prints. I wasn't even going to talk about them because they were second estimates, and the changes were very little to no changes whatsoever. But we've got a much weaker dollar this morning that should be putting some upward pressure on asset prices here. Looking over at interest rates, we have got lower rates across the board, especially in the middle of the yield curve this morning. The 30-year Treasury, 4.442. That is down almost 4 basis points here. The 10-year is down almost 5 points to 4.256. We got the 2-year at 4.209. That's down 4.5 points. And the 1 month at 4.636. That's down a fraction of 1 point. Looking over at the commodities board, we got a little bit of green here, considering that weakness in the dollar. I'm not surprised there, but it's actually, there's emphasis there, a little bit of green. It's barely moving. Spot gold here, $2,652. Now that's up about $18 or 0.7%, but gold is still well off its recent highs. Spot silver, meanwhile, barely budging despite that weaker dollar, $30.46. That's up 2 cents, 0.05%. So my favorite of the shinies is barely budging here. We've got copper is higher by about 0.8%. Platinum is up by 0.5%. Palladium is down 0.75%. And WTI crude oil for January futures here, 68.96. That's up about 20 cents this morning or 0.29%. So a pretty muted reaction in the commodities board this morning, considering that weaker dollar. And Bitcoin is rallying here off of its lows from yesterday. We're at $94,360 as priced on Coinbase. That's up about 2,400 from, well, actually, that's up almost 4,000 from the lows yesterday. Let's switch over to Bitcoin and look at some of the hourly candles that we gotten over the last couple of days. Now, you could, well, here, let's zoom in a little bit here. That's a little more accurate. So you can see, guys, we came up and we're flirting with that 100,000 level up here. And we failed that level. We sold off pretty hard. We went as low yesterday as, what did we hit? 90,682. So that was a pretty substantial sell-off, over $9,000 per Bitcoin over the span of those 3 days. Maybe we found a bottom here, but we've been making consistently lower highs on our way down here. So we need to take out some of these prior highs before I get too encouraged about a V bottom here. For the time being, it looks like this downtrend is intact, though. But pay attention to that 97 or that 90,000 threshold, guys, because that is a big gap to fill down. If we fail this level, the next support we're going to find is probably not until the mid to high 70s here. Also, guys, speaking of the decline in Bitcoin that we saw over the last couple of days, look at the drop in MicroStrategy over the last 5 days. This thing peaked out somewhere around $540 a share. It's trading right now at about $380 a share. Now, MicroStrategy just ran like crazy. We did a big show about this on Friday afternoon. about their infinite money glitch. But MicroStrategy was trading at a ridiculous premium to the value of its Bitcoin. This stock is basically now essentially a levered Bitcoin ETF. I know there's also a dying software business attached to this company, but that's not really what MicroStrategy is anymore. Just be careful with this one, guys. This is not attached to any kind of fundamentals or anything. It's not even really attached to Bitcoin because this thing was trading at more than double the value of the Bitcoin that MicroStrategy holds. So when Bitcoin sells off, this thing is going to sell off even harder. It dropped something like 35% a couple of days ago. Now it's up this morning about 7.75% here because Bitcoin is rallying. But again, I'm not touching this one with a 10-foot pole. I just like to own Bitcoin outright. Now, let's talk about Dell's earnings here. Dell shares fall on light forecast despite growing AI sales. And of course, we have to squeeze in as much AI positivity as possible, CNBC, because we got a revenue miss and a guide light, but we can't actually ask any probing questions about the delays in Blackwell or anything like that. Nope. We got to just throw in as much hopium about the AI mania as possible. Keep that bubble inflating, keep blowing into the straw, keep retail piling in. And, well, this is what we get. Dell Technologies forecast fourth quarter revenue and earnings below Wall Street expectations Tuesday, despite bullish commentary from the company on AI sales growth. The PC maker reported quarterly earnings Tuesday that beat analysts' expectations for earnings per share, but came up light on overall revenue. Let's see, earnings per share, $2.15 adjusted versus $2.06 expected, so a slight beat on EPS. Revenue $24.4 billion versus $24.67 billion expected. That's a miss on revenue. That is a rare revenue miss for an AI company. That's a big deal that's being overlooked by this bullish language in the CNBC article. Net income climbed 12% to $1.12 billion or $1.58 a share. That's up from about $1 billion or $1.36 a share a year ago. Overall revenue increased about 10% from $22.25 billion a year ago. Now, Dell's guidance, they said they expected between 24 and 25 billion in revenue during the fourth quarter. That is less than expectations of 25.57 billion. It said it expected $2.50 in adjusted earnings per share. That's versus expectations of 265. So weak guidance here. It's got to be the Blackwell chip. It's the only explanation for this weak guidance. And again, you just get no commentary on that. Chief Operating Officer Jeff Clark told investors on the earnings call that growth from AI will change from quarter to quarter. This business will not be linear, especially as customers navigate an underlying silicon roadmap that is changing. What does that even mean? And our customers are navigating an underlying silicon roadmap that is changing. You guys, you got. I've seen this a million times. You got to watch out for those underlying silicon roadmaps. They are ever in flux. They are. What does that even mean? I'll tell you what that means. It means Nvidia's chips are overheating. We need to redesign our racks, and our numbers are going to suck next quarter because of that. Now, you could say that, or you could say customers navigate the underlying roadmap that is changing. All right, yeah, always in motion the future is. Thank you, Master Yoda. Our servers are overheating, and that's why we missed on revenue, and that's why we're probably going to miss again. Now, Jim Cramer said this is just the information is a struggling news outlet seeking relevance, which is definitely not what the information is. It's just independent media that does a much better job than his network of covering what's going on in the AI industry. But look at Dell here, guys. Look at that rosy, despite bullish AI sentiment and growing AI server racks. Look at this stock this morning, down 12.5%. Do you think a 12.5% drop in the stock, does it match that rosy headline at CNBC? Definitely not. Look, guys, the AI server business, it's a very low margin business. They don't make very much money. Dell's revenue numbers had been impressive, a lot of growth there, but they're not making any money on it. Now they need to redesign their servers because Nvidia says the problem isn't my chips. The problem is your servers don't cool them well enough. Keep an eye on this one, guys. The problems are not just at Supermicro. Now, Dell doesn't have the accounting issues that Supermicro has. Dell doesn't have the related third-party transactions and the sanctions violation that Supermicro has, but they do have the same razor-thin margins, and they are susceptible to the same supply constraints that Nvidia is having right now. So keep an eye on the server business. Again, cracks forming in the AI mania narrative here. Now, we've also got some weakness in personal computing here. Hewlett-Packard, HP Inc. reports mixed earnings and the stock falls. This one is in Barron's this morning. HP reported mixed earnings on Tuesday and the stock fell in pre-market trading. The PC and printer manufacturer reported fourth quarter earnings per share of 93 cents. That's roughly in line with Wall Street's consensus estimate and up 3% year on year. But revenue for the quarter was $13.2 billion. That's down 4% and below expectations of $14 billion. So same thing. We got a decent earnings number, but a revenue miss over at HP. While analysts expected $9.8 billion in the PC segment revenue, HP reported just $9.6 billion in the quarter. That is up 2% from last year. The printer segment ended a streak of 11 straight quarters of contraction, up 1% to $4.5 billion. Analysts were looking for $4.2 billion. HP earnings per share guidance for next quarter was disappointing at just 73 cents versus 85 cents the analysts were expecting. And driving revenue growth was commercial markets up 7% on the year, but consumer markets weighed on growth down 9%. Now that lines up with what we saw from Best Buy. Consumer electronics down 9% year over year. We got lousy earnings from Best Buy yesterday. Now, Best Buy, you've got that brick and mortar story, the Amazon effect. That's been going on for about 10 years, but it's not just the decline of brick and mortar that's going on at Best Buy. You can see it here in HP's numbers as well. Sales of consumer electronics down 9%. Not a good indicator for the holiday shopping season. HP is down 7.5% pre-market this morning, trading at $36.20. That's off by about $2.90. Another one going on. Exclusive. France is weighing zero interest loans for 6 nuclear reactors. Sources say there's Emmanuel Macron. He's the one who's looking to finance these nuclear reactors. French officials are drawing up plans to provide an interest-free loan to state-owned power utility EDF to finance a significant portion of the construction of 6 new nuclear reactors. Two people familiar with the matter said. So congratulations to the uranium bulls. I know there's a lot of you guys following this channel. Possibly here, more future demand for uranium taking shape. The financing would clear a major hurdle for one of the country's biggest public projects in years. The plans are similar to financing agreed recently for a single reactor in the Czech Republic. Although the size of the loan is not yet known, it shows the growing need for state support in financing new nuclear projects in Europe. President Emmanuel Macron announced plans in early 2022 for 6 new reactors with a total production capacity of about 10 gigawatts. Guys, these are huge reactors. The EPR, the European Pressurized Reactor, it's very similar to the PWR style reactors we have here in the States. These things are 1,650 megawatts each. They are huge reactors. So 10 gigawatts from these 6 reactors here. That tells me they're definitely building EPRs and not some of the smaller ones. Construction of the first reactor is due to start in 2027, but Macron has never said who would pay for the project, which at the time was estimated to cost around 52 billion euros, although recent media reports suggest costs may be higher, reaching as much as 67 billion euros. The French have built a couple of these EPRs. They built one at a reactor called Flamanville. That's in northern France. And then there's another one, I believe it's in Norway, called Akilawodo. These are these EPR-style reactors. They were way behind schedule and way over budget. So I'm inclined to believe that the final price tags are going to be closer to that 67 billion euro number than the 52 billion number that was floated by Macron. These reactors are notoriously expensive, but it's a lot of power, 1,650 megawatts. Also going on this morning, Aston Martin shares drop on car makers' second profit warning in 2 months. We were just talking about this one a couple of weeks ago, and they're back in the news this morning. Aston Martin shares fell on Wednesday after the British car maker said it expects delays in its deliveries will hit its full-year earnings in an announcement that marks the firm's second profit warning since September. In a regulatory filing to the London Stock Exchange outlining plans to raise £210 million in debt and to reinvest in the company's future growth, Aston Martin revised its profit guidance downward from already lowered figures it previously issued on September 30th. In its profit warning, Aston Martin explained that minor delays had scuppered plans through which it aimed to deliver the majority of a batch of 38 special edition Valiant models to customers by the end of 2024. Now, those special edition Valiants sell for about $2.5 million each. Must be nice, huh? Aston Martin first revealed plans to sell the limited run of 38 special edition Valiant models in June, with a view to having delivered the majority of them by the end of 2024. It looks like that's not going to happen now. But that's not the only thing that was in the filing. In the filing, Aston Martin also outlined plans to raise 210 million with an M pounds in financing by issuing 100 million pounds worth of new debt and selling an additional 110 million pounds worth of shares in the company stock. So they're borrowing and they're diluting investors. Also buried in this press release, the car maker said it plans to use the 210 million pounds in new financing to strengthen its balance sheet and invest in future growth opportunities as it pushes forward with a view to maximizing the potential of its fully reinvigorated portfolio of cars. Fully reinvigorated, just like those Jaguar sales, I guess. Those things are really invigorated, according to the thing with the pie chart for a head there. The new debt will also go towards funding Aston Martin's plans to invest 2 billion pounds over the 5-year period from 2023 to 2027 in electrifying its portfolio of cars. So a lot of this money is going into future electrification. Now, look, maybe I shouldn't view this through the American lens, because here in the States, EVs are just going bust. I mean, the EV bubble it's bursting. We're watching it in real time. Now, Europe has always been further along in electrification than the States are. So maybe I shouldn't view this through that lens, but this strikes me as a failure to read the writing on the wall. The electric cars just are not selling that well here in the States. Now, they've still got all the mandates over in Europe. So I guess when you factor in the political differences, it makes sense. But this just strikes me as to a hammer, everything looking like nails. Oh, we're delaying our profit estimates for the second time in 3 months. Oh, what does that mean? It means double down on electric cars even more, even though that's why we're losing money. But, well, apparently that's what they're going to do. So Aston Martin having a rough morning here. Stocks down 5.5%, trading at, is this priced in dollars? This is priced in pounds, 102.7 pounds per share. Also going on this morning, coffee gets even pricier as Arabica jumps to the highest since 1977. Guys, I'm not going to talk too much about this one because we're getting a little long on time here. There was a big drought in Brazil last year. There was also droughts and then flooding after the droughts in Vietnam. Those are two big coffee producing countries. And so the price of this Arabica coffee bean has just skyrocketed. And yesterday it jumped even more. Now look at the chart that's going on here. This is coffee futures. And you can kind of see we're going all the way back to the end of last year. Now, we've had this problem all year. Coffee has been getting more expensive all year. But OMG, what the heck just happened here? It went vertical. Now, it's worth pointing out that it looks like this started around November 4th or November 5th. Now, I don't think the election had anything to do with coffee. Maybe some of the snowflakes that are making their little screaming TikTok videos are a little more highly caffeinated than they were pre-election as part of their coping mechanism. I don't know what the heck's going on. But for whatever reason, coffee futures have been going vertical since the 4th or 5th of November, on top of this pre-existing trend of higher prices. Now, I'm guessing you got a little bit of the futures market is probably getting ahead of itself. We've seen this in the past. These things usually correct back downward pretty suddenly and violently, right? We had something similar in March. Prices were rocketing up, and then they came right back down and then rejoined this trend. So we're probably going to eventually see something similar to that. I think I drew enough squiggles on this chart for everybody here. But coffee's getting more expensive, guys. Good luck with that one. That's just what we need. And last but not least, 30-year mortgage rates, all right, finally took a little dip here. 6.86% for the week ending November 22nd. That is for the average 30-year mortgage with a conforming balance. That is down ever so slightly from 6.90. So a little bit of a break in interest rates, but you'll notice, guys, since the end of September or since the middle of September, they've done nothing but go up. This is the first decline, even though it's a small one, the first decline in interest rates since that bonkers 50 basis point rate cut from the Federal Reserve. So interest rates a little bit lower here, and it's immediately resulting in higher mortgage demand. Mortgage applications in the U.S. rose by 6.3% from the previous week for the period ending November 22nd. That's the third consecutive month of increases. That trims the 30% plunge. That should say the third consecutive week of increases, mind you. 6.3% growth. That follows 1.7% growth last week. But you also notice there was a big period of decline before that. Applications for a mortgage to purchase a home soared by 12% from the previous week as home supply was extremely tight. On the other hand, applications for a loan to refinance a mortgage actually fell 3% in the period. And last but not least, let's talk about jobless claims. We got initial jobless claims were unchanged at 213,000, still pretty low compared to where they were a few weeks ago. So the pace of sell-offs has slowed. It's not surprising. You usually don't get a lot of job cuts right before Christmas. The big wave of layoffs typically comes in January. Now, continuing claims are still elevated. They're down just a tick. Continuing claims, 1,907,000. That's down 1,000 from the prior week. So a barely dropping continuing jobless claims here. But at the very least, it didn't go up. But the labor market remains a closely watched indicator. Keep an eye on those jobs numbers for what the Fed might do next. And I just want to say thank you so much to my buddy Mish. Thank you, Mish, for gifting 10 Nobody Special Finance memberships. Hey, you 10 new Melonheads, welcome to the Melonheads, you guys. Be sure and give Mish a thank you. Thanks, Mish. And by the way, while we're here, I just want to remind you guys, no show tomorrow and no show Friday. I'll be on the road with family for Thanksgiving, so I hope you guys all have an excellent holiday. And my buddy Mighty Mike 53 says reverse repo 148.8 billion. I did catch that one yesterday, Mike. It's not quite a new low, but the reverse repo is getting lower, making lower highs and lower lows as we go. So we'll be keeping an eye on that one, especially watch that one around New Year's at the end of the quarter. I'm very curious to see what we come out of the year and into January with that reverse repo. And also, we'll finally get the answer to the question sooner or later. What happens when this goes to zero? Are we looking at a liquidity event? Only time will tell. Thank you so much, Mighty Mike, for the super chat, sir. And thank you to Charles G for the good vibes, who says, happy Thanksgiving, everyone. Thank you, sir, very much. Happy Thanksgiving to you and yours as well, sir. And happy Thanksgiving to everybody else that's out there. And Joey Socks, a.k.a. Paulie Walnuts there, he's gifted 5 Nobody Special Finance memberships as well. Thank you so much, Joey, for supporting the channel. And again, guys, if you receive one of those memberships, let Joey or Mish know that you are grateful for the donation. Thank you very much, Joey. Steve Woitis says, happy Thanksgiving to all my American friends and families. See you on Monday, December 2nd. Is that? Yep. Monday the 2nd will be the next live stream. That is correct, Steve. No show tomorrow, no show Friday. And thanks again, Steve, for that. And Hunt and Cover saying, have a cup of cheer. Yeah, a cup of rapidly appreciating cheer. All you guys on the CME group over there, quit bidding up the cost of my wake-up juice, please. I mean, there's one thing that needs to be sacred. Can we not mess with the coffee? Please. I mean, the beer is more expensive. The houses are more expensive. Everything's more expensive. Just don't mess with my morning coffee, man. Thank you so much, Hunt and Cover. I appreciate the super chat and the support of the channel. Guys, thank you so much for all the good vibes. I appreciate that. Thank you for supporting the channel. Real quick, on a side note here, let me just comment on something that I have been seeing. I'm going to wade a little bit into some muddy waters here. Don't be those guys. There are people out there that I'm seeing right now. I'm hearing stories about people who are refusing to go to Thanksgiving dinner because their relatives voted a certain way, or they're not going to be friends with a certain person because of a way they voted. All right. If you're one of those people, if you're skipping out on a holiday with family, or if you're ending a friendship over politics, you are the problem. All right. You out there who is ending an otherwise value add relationship with another person. All right. My best friend in the world is a diehard liberal. He was my best man at my wedding. He's awesome. We disagree about everything. We can scream about politics, get up in each other's face, and then hug. Good night. See you tomorrow. Love you, brother. All right. If you are ending personal relationships, or if you're sitting out a family gathering because of politics, you need to seriously rethink what you're doing in life. At the end of the day, does it really matter? I was disappointed when President Prune Juice won a few years ago. But you know what? I didn't go divorce from friends and family over it. I didn't go abandon long-standing friendships, people I've been friends with for years, because I was a sore loser that my side lost. And when my side won and I didn't like how things were going, I didn't go abandon friendships with people over this. I'm seeing this trend all over the place. It's all over Twitter. It's all over Facebook and social media. And I'm hearing personal stories from people close to me who are so upset because relatives won't have anything to do with them. What the hell are we doing here, guys? Seriously, set aside that petty shit and go eat some turkey and get a hangover and loosen your belt and then make empty promises to yourself about the diet that's going to start in January like everybody else has done for hundreds of years. All right, get over this silly political nonsense. And there are these hustlers out there who make their living peddling this crap who are telling you you shouldn't have anything to do with people over politics. How stupid and petty and weak is that? Anyways, if you're one of the people engaging in that, congratulations. You're part of the problem that's tearing this country apart. And I'm going to get off of my soapbox that. Now I'm going to end with good vibes, folks. Thank you so much to everybody who joins me every morning for the Coffee with the Melonheads. I appreciate that very much. I am very grateful for you guys. I hope you have an awesome time with your family. Please be safe on the road in your travels. Thank you, everybody, for the donations, for the super chats, as well as my magnanimous Melonheads on Patreon and YouTube. You guys rock. Looking forward to talking to you guys at 1 p.m. Eastern time today for our weekly get-together on Zoom. Links down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.